Okay. And if you feel moved to tweet about this webinar, you can use our handle at ILC UK and hashtag vulnerability challenge. So hopefully we'll have a bit of that going on at the same time. How are we for time? Right, another minute or two as more and more people join us. Welcome anyone who's currently joining us or has joined us. We'll be starting this webinar in a couple of minutes' time. Right, well, welcome to this ILC webinar, one in a series during our lockdown on the vulnerability challenge, supporting vulnerable consumers' financial well-being in the coronavirus pandemic. I'm joined today by a very high-powered panel: Grant Hughes, Director of Advice at Legal & General; Karen Brolly, Head of Products at Hymans Robertson; Martin Lyons, Business Development Director at Just Group; Tish Hanifan, Society of Later Life Advisors; and Shayne Halfpenny-Ray of the Chartered Insurance Institute. They're all very welcome. I'd like to thank all of you for joining us in this webinar, which I'm pleased to say is supported by Legal & General, Hymans Robertson, and of course supported, as many of our activities are, by our ILC Partners Programme. In case you're wondering who I am, I'm Nigel Waterson. I'm a trustee of the ILC, have been for some time. A few housekeeping rules before we kick off. Internet issues, do bear with us if anything happens. I think we're all getting used to these sort of ways of communicating and the problems that can arise. At the bottom of your screen, you will see a chat function to communicate direct with our panelists and delegates, as well as a Q&A feature. And I'll be monitoring and working out the questions to put to our panelists if you'd like to submit them. We'll be using a couple of polls to get some of your views as we go through the webinar. If you do have any issues on audio or video, obviously one thing is to switch off the video function. That sometimes helps. You can try to connect with an Ethernet cable or through a hotspot on your phone. If you do get disconnected, just use the same link from the email we sent you to get back in. That should happen seamlessly. Famous last words. As I said, you're all invited to post comments on Twitter, hashtag vulnerability challenge, as we carry on. Now, a bit of background to the webinar. The FCA has come up with some research suggesting that half of UK consumers, more than 25 million people, currently show one or more characteristics of potential vulnerability. And in an aging society, more and more of us are likely to become vulnerable consumers, even if just temporarily. And it's also clear, just by reading the papers and looking at some of the reports that have come out, that the current pandemic has provided a whole range of new possibilities for fraudsters and scamsters. And in this webinar, we're trying to explore how financial services firms and advisors have responded to the crisis and what more can be done to support vulnerable consumers in these challenging times, from preventing pension scams, managing money, giving advice to those who need it most. We'll hear from our expert panel today how their organisations have responded to the crisis to support vulnerable consumers and what they think needs to happen both in the short and long term. We then want to hear your views on what works and what doesn't. And do submit your questions, as I say, to our speakers using the Q&A feature at the bottom bar of your screen, and join the conversation on Twitter. Now, before we get started with our speakers, well, let's have a couple of polls. Poll 1, we can have that up on the screen. Fairly simple. Here we are. It's just one question. Are you concerned about the financial well-being of someone close to you, a friend or a family member in the current pandemic? Yes or no? We don't have a don't know option, but please fill that in. And in a few matter of seconds, we will have a result. So repeat the question, are you concerned about the financial well-being of anyone close to you during the pandemic? And we have a result. Slightly surprising, I think. I mean, 61% are concerned about a specific individual and 39% aren't, it would appear. But that doesn't mean to say generally people are not concerned about the possibilities of scams and so on. So 61%, good healthy majority. Now we've got a second poll, which we'll put up on the screen, which is the last poll before we start on speakers. Have you or someone you know been subject to a scam or attempted scam? Yes or no? Right, the results. Well, remarkably, 77% have themselves or someone they know been subject to a scam, which I think puts it all, the whole discussion in context. So moving on, let's go to our first speaker, who is Grant Hughes, who joined L&G in April last year as Managing Director of L&G Financial Advice Limited. Grant is a chartered advisor, fellow of the CII, has previously held a number of senior roles at Mercer, Jelf Financial Planning and Barclays. Grant, over to you.
Thank you, Nigel. Hi, everyone. As Nigel's already said, I'm Grant Hughes. I'm here to talk about what we're doing over at Legal & General Financial Advice. We launched our new advice business in November of last year, so it's very much still in our infancy. Our customer demographic is supporting those over the age of 55 to have a happier, healthier and more colourful retirement, as we like to say, which means many of our customers are potentially vulnerable customers, particularly those that are interested in lifetime mortgages. Many of our customers won't have saved enough to enjoy their retirement in the way that they would wish to. Some of those may be looking to help find some funding to help them with aspirational purchases, such as the holiday of a lifetime, a new kitchen or home improvements, but many are also seeking guidance, advice or financial support to help them battle some financial difficulties. This could be debt consolidation, paying off an interest-only mortgage, or raising finances to help see them through a period of reduced income, which we're already seeing an increase in over recent weeks. So as a business, we've got a duty of care to ensure that we can recognise those that are showing signs of vulnerability, whether that's on a temporary basis or over a longer term nature, so that we can ensure that they're getting the right advice and support to provide them with the outcome that's best for them. So what are we doing? As a new business, we looked at various industry best practices and sought some advice from some experts in the fields. We certainly don't pretend to have all the answers within our own business, so we spoke to a lot of people. We then reviewed our own processes and rated ourselves against the 6 key areas that you can see on that chart there. This really helped us to identify any strengths and weaknesses and to formulate a plan and to develop our own policy to improve the vulnerable customer experience. I think the quality of our people is obviously hugely important in this. Within the advice business, everyone was new to the business, so we established quite a robust training program to train everybody from those operating the telephones through to all the advisors in how to identify and support vulnerable customers. Where we didn't have the expertise in-house, we brought in leading consultants in this area as well to help us. We've been rolling out Dementia Friends training, for example, to all our colleagues to establish the right culture, which again is hugely important to make sure that it's really fully embedded within the organisation. But it's not just about having highly trained people, but also making use and sensible use of technology as well. So Within LGFA, we've been working with a technology firm to implement voice analytics to help us identify potentially vulnerable customers based on the language or the pitch and tone of their voice, which can be done in real time because all of our interactions with customers are recorded. So that can raise some flags for our people as well. So the system's constantly evolving and learning so that we can get some really useful MI to help us learn about our customer base. So if we can move on to the next slide, please. So we've also created our own in-house advice management system, or AMS as it's known, which enables us to capture when we identify customers being vulnerable or potentially vulnerable. The FCA has provided some really useful guidance in their recent consultation paper, so we've used that as a framework to capture the different types of vulnerability as shown in the diagram there. And this has been further developed as well, so that we can now not just record any one vulnerability, but multiple types of vulnerability as well, so that we can really try and understand those different challenges that some of our customers have got. And where appropriate, we can then use this information to work with business partners, with the customer's permission, obviously, to make sure that they're getting the right level of support and service. So whilst it's very much early days for us, as we only went live in November, but by investing in the right systems and investing in the right people, we believe we're on the right track, although obviously with any business, there's always more that we can do. So thank you, Nigel.
Unmute myself. Well, Grant, that's very helpful, very good to get us off to a good start. I'm now going to ask Karen Brolly to speak. Karen is Head of Products at Hymans Robertson. She heads up the product services for Hymans Life and Financial Services clients. She's been working in financial services for over 25 years, spanning life assurance, asset management, pensions and banking. Her specialism is product development with a particular interest in protection and long-term savings products, where she has a keen interest in implementing solutions to inform customers and improve financial outcomes. Karen, over to you.
Thanks very much. Good afternoon, and thank you to the ILC for inviting me to join this webinar on what is a very important topic. While our clients at Hymans Robertson are financial services firms rather than the end customer, this subject of vulnerable customers is one that we have raised within our team, and we certainly continue to do further research and to discuss it with many of our insurance clients. So maybe just taking some of the information that Grant had on his slide, we just thought we could have a look at some of the drivers which the FCA have set out in terms of the key drivers of vulnerability, just so we sort of are all on the same page as to what we're talking about here, and also to consider how this might have changed under the current circumstances with COVID-19. So health could be physical or mental health. It could also be around old age, which in itself tends to be a factor. Life events, we could be looking here at things like bereavement or divorce, or something which impacts your employment, such as redundancy. Then when we think about financial capability, here we're looking at an individual's confidence in dealing with financial matters, but could also be very much related to language skills, whether English is your first language or not, numeracy skills. And of course, nowadays, I think digital skills would also come under this category of capabilities. And then finally, we've got our financial resilience, which is looking at things like level of savings and debt, and also maybe related to your income and whether that's a stable level of income. And I think we can see that there is a huge amount of interdependency, which was shown nicely on Grant's slide, but there's a huge amount of interdependency here. And the real vulnerabilities could arise when someone has a number of these attributes. And although we have mentioned old age as being important, we can also see that many young people are very vulnerable as well due to their lack of perhaps experience and therefore financial capability, but also their resilience because they may not have the sort of savings levels. And I think Nigel put it very clearly, as the FCA did at the start, that we have got potentially half of the population already displaying one or more of these characteristics. And that has certainly increased this year as well. Sadly, more people than ever have been bereaved and finding themselves in very, very difficult situations where they maybe don't have their family offering physical support as they would normally do. And of course, financial resilience being very much tested across the board. The things that we want to look at in particular, maybe thinking about scams, there's just one other topic before we move on to how we can work together, is just to think about the terminology. And I do have a slight concern, and although we're using the topic or the word vulnerability here today, and I think that is the word that we're all using, I do have a slight worry that that has negative connotations. I think it's perhaps one that individuals themselves don't want to see themselves as being vulnerable. They might feel reticent to sign up to saying that they are vulnerable or to be on some sort of register of vulnerable customers. So I think that's perhaps one that we maybe need to put out to our marketing colleagues to see if they can find a better badge for this that makes people feel like they're just customers who are in need of additional support, and maybe that sort of language would help rather than asking someone to identify as being vulnerable. So some of the ideas to think about in terms of how different parts of the industry can work together practically. I think the FCA as the main regulator have certainly given this topic real prominence, which has led to increased awareness, which is always a great first step. And they also can sort of take the lead to ensure that there's consistency and fairness. For me, the two sort of main priorities that I'd like to see the FCA working on are around fair value. So they've already mentioned that in their business plan, which was great to see. And the second point is around accessibility of financial products. And by that, I specifically mean the sorts of examples we have seen in travel insurance, where individuals who've maybe had cancer treatments have really struggled to get travel insurance. I think that signposting of specialist insurers and that type of thing that the FCA have encouraged have all been steps in the right direction. Also thinking about the steps that the government can take. It was great to see that they made some short-term rule changes recently to specifically help those currently suffering financially to be able to access their lifetime ISA, and they've reduced the penalty that was on the lifetime ISA to help make that a more sensible step for individuals who want to tap into their savings. I think for insurers, particularly during this current situation, they've had to deal with their own operational difficulties, but it's been great to see that many of the insurers have prioritised phone lines for their vulnerable customers, and they often don't have internet access. So it's been great to see that happening. And I think for me, the key piece for insurers now more than ever is to really have that embedded in the culture of the firm. We've just had great examples there from Grant on LNG as to how they're approaching that, but this has to be at every level of the organisation. I think one suggestion I would make is that the CEOs, the board members of insurers actually sit through the conversations that happen when a customer phones up with an issue, just to see how they think that either they would deal with that, or maybe even to picture an elderly relative how they might react to that conversation. And of course, the staff training that backs all of that up is absolutely essential. And then finally, just to touch on the concept, which I think is hugely important to tackle this very difficult vulnerability challenge, is around the whole industry working together. So there are sources of independent and free to use resources, for example, the Money Advice Service, which many insurers will signpost as well, the ABI, other sort of industry groups who are coming together. And perhaps it's also a time where financial services industry can look across to other suppliers to see where they might have got things right and potentially learn from other markets and other sort of industries. So I'll stop there. Hopefully that gives an idea of the thoughts that we've been having, and I look forward to continuing the discussion. Thanks.
Hi, the dangers of being muted. Yeah, thanks, Karen. Very thought-provoking. We've had quite a few questions on this issue of defining vulnerability, so we'll come back to that as a specific issue when we've been through all the panelists. But as people go along, they may want to comment. Next speaker is Martin Lyons, who heads up Just's team of retirement and later life specialists. supporting advisor training events and conferences across the UK. He joined Partnership in 2009 ahead of the creation of Just, having worked alongside local and national advisor firms on pensions and retirement-related issues. He is a regular speaker at financial services events with subjects ranging from technical issues to consumer vulnerability and behavioural bias. Martin, over to you.
Thanks very much, Nigel, and thanks again for inviting me along here today. I don't have any slides, I'm afraid, so you just have to listen to me for a few minutes, and hopefully we can pick up some of the themes as we go through today's session. But I think covered there. I think it's worth going back to the beginning, though, in terms of just understanding what is vulnerability, and I suppose who is vulnerable. What can we do about it, and and really why is it so important now? And I think if we go back to the FCA definition of vulnerability and just bear that in mind, this whole concept of somebody who is, as they say, especially susceptible to detriment, particularly where a firm isn't acting with due levels of care. So that's kind of the FCA definition, which is very broad, and it's broad on purpose, really, because looking at what Karen and Grant have said there, helpfully they've pared it down into those 4 areas, and so maybe we'll get into detail of that as the conversation goes on. So the financial and emotional resilience, life events, capability and health as 4 key areas people might want to start from if they're looking at what do they do in terms of putting a vulnerability policy together or looking at this area. So but I think that when we look at this fairly emotive word, and I know we've had some questions in it already in terms of who is vulnerable and who wants to be called vulnerable. It is very emotive. Some people are very good at hiding vulnerability. So it's really a key skill of the financial services professional to elicit quite a lot of information from an individual as well. And I think it was mentioned earlier that whilst certain vulnerabilities or certain circumstances might present themselves as people approach later life and are into later life, clearly, there are things that can happen at any point in time. And I think we're all experiencing that at the moment, or certainly aware of people who are going through different circumstances right now. In fact, I was on LinkedIn the other day having a conversation with somebody, and they made this quote, and I think it's really pertinent for today. Those who normally lead comfortable and stable lives may suddenly become vulnerable due to worries about health and wealth. And so often we talk about this subject area and do workshops, and there is this kind of perception that this is an issue around finance or socio-economic status. And I think what we're finding now is that it really is a time to broaden our perspective on that. So lots of things particularly relevant to the current crisis I think we need to talk about, because clearly if you look at what consumer groups have said can lead to poor outcomes, exclusion, which we've talked about in terms of not necessarily being online and things like that, leading to potential disengagement, and of course this area of scams. And I think social isolation by definition will mean that people are potentially feeling excluded and disengaged. There's less face-to-face contact, certainly, unless we're all zooming around all over the place and things like this. So I think there are some things now that exacerbate vulnerability, and hopefully we can start to talk around those. But I think there are some immediate things firms can do around working out how you're going to prioritize and stay in touch with consumers, maybe even not necessarily those who are already vulnerable, but as already been mentioned, lots of people are potentially vulnerable. And is there some preventative measures that can take place now, particularly when we look at that health aspect, for example, around the stress and anxiety that is being placed on all sorts of individuals now for various reasons. So I think, I'm sure we'll get into some of these things a little bit later on. And then I think there are some key things that firms can do around training. I know we've been working with Solar as well on launching some training for financial professionals too. So I think that vulnerability, it is wide-reaching. You've had the 4 areas in terms of a starting point. There are some specific areas that relate to that now in a time of crisis. Financial resilience was mentioned. Even though we might have had somebody who was quite financially well off, Now we know we're in a situation where we're seeing furloughing, we're seeing an economic downturn. We're looking at financial resilience from a perspective of what assets do I now need to draw upon? How am I going to cope from a business perspective in this downturn, and so on? So lots of people looking at those trigger points could now be classed as vulnerable, perhaps, that you wouldn't necessarily have classed as vulnerable previously. And hopefully by the end of the session, I'll hopefully share some action points that I think that firms can do. So I'm going to cut it brief there because I'm sure people want to get into the main conversation.
Yeah, thanks, Martin. That was very helpful. And I think introducing this concept that for the discussion that people who 3 months ago wouldn't be considered remotely vulnerable are suddenly vulnerable unexpectedly, whether for financial reasons or reasons of worries about their health. So let's go on to my old friend Tish Hanifan, who is going to be next. She's a barrister. She's the founder and joint chair of the Society of Later Life Advisors, which she developed from an initial concept to a national organisation with strong brand recognition in the later life sector. She's a founder member of Solicitors for the Elderly, vice chair of the Kent branch of the Society of Trust and Estate Practitioners. Tish was a member of the Vulnerability Working Group at the FCA and the ABI and continues to contribute to this area of advice. Tish, let's hear what you have to say.
Well, good afternoon, everyone, and thank you to the ILC for inviting me to take part in this, which I think is a really interesting discussion. I'm well positioned here because you've already heard some excellent presentations around what constitutes vulnerability, and also had a very good lead-in from Martin Lyons, who did say that he'd been working with SOLA on some training that we've been doing. So if I may, just in this brief presentation that I'm going to give to you, I'm going to build on that and say what SOLA has actually been doing, so from a practical context to support our members. So what we decided to do to help support our members was to provide some additional training, that would help them in this current situation. SOLA perceives itself to be a trusted brand, and at this time I think there's never been a more important time for people to have a trusted source of advice and support. And the feedback from our members was that initially, in the very first early stages, consumers didn't want to know anything at all. It was such a huge change to their personal lifestyles and the rapidly changing world of this pandemic. And then they've begun to see that this has an impact for their future income, security. They looked at the stock market, pensions, and has been mentioned here also, along with that undergoing mental health issues of just all pervasive anxiety. That's unnerving to them. So we were trying to help advisors in their role, which we would say briefly would be at this time reassurance, trying to help them avoid inertia, doing nothing because they're overwhelmed, but equally not making very big short-term decisions against, say, long-term goals. And obviously, as been mentioned today, that leads inexorably to perhaps people being incredibly vulnerable because of isolation or because of fears for the future for them, to the issue of financial scamming. So we've been doing some additional training with our members on issues like financial scamming. And what we've asked the members to do is to encourage a bit of a proactive approach. So to contact their clients, to let them know they're available to help them. We've produced some short videos actually on Zoom, Teams, virtual meetings. I have to say that the other panelists would not have known that if they'd seen me, you would all seen me when I tried to log on. The whole point is, I know that Karen said earlier about, this issue around vulnerability. Vulnerability can change, can't it? There's a whole lot of people who have been disengaged because they just couldn't access technology. And the positive side of this is it's encouraged some people who never thought they would to be using WhatsApp and Zooming in, and we're encouraging our members to help them to do that. And the other thing we're really encouraging our members to do with lots of additional training is to build on the soft skills that they have. Training on how to conduct a virtual meeting and how to help clients to do it. I think Martin would say in the work we've done that soft skills are key to issues around vulnerability, but you probably need different soft skills when you're looking virtually, not directly at people, how do you build and maintain empathy? What particular soft skills do you need to do for that? How do you listen to people and pick up clues? And I would say on vulnerability there, picking up clues comes up to things such as undue influence. How do you know if someone else was in the room making some kind of influence on them? How do you perhaps assure yourself that you can assess their capacity remotely, because capacity obviously underpins their ability to engage with financial services. Can you do that? We'll maybe discuss that. If you can, how do you do it? I would say one other thing as well with this, that in terms of just actual knowledge, not skills, it's been important to really make sure our members understand the very important changes to care planning and funding that have been introduced by the Coronavirus Act 2020. That's been an area that I've been specifically speaking about. For many people who are looking at, say, care funding, they would be looking at, well, would I be covered by the NHS, continuing healthcare, to know and be able to tell them that that is currently no longer available. To look at the fact that at the moment it's possible now, and I think 9 local authorities already have, to suspend their usual obligations under the Care Act to assess and meet needs. So those kind of things are really important things they need to know. I would say the other thing we've done is we're doing some training on what I would call compassionate conversations. Now we have one actually tomorrow by a well-known campaigner on later life issues. Because as Karen also mentioned, there's been bereavement and things like this. Our advisors are going to be touching families who bereavement has been a factor. How do you change your dealing with them and have what we would call, yes, a compassionate conversation? And just to pull it all together, in the work we've done with Just, we produced a computer-based training program on vulnerability, which we were very fortunate to be finalists in the ILC's Innovation for Aging with. And I spoke to Martin about this yesterday. We've had 3,990 people so far take that, financial advisors. So if there's 10 of you on here want to get us to 4,000, now's your moment. Okay, thank you.
Well, thank you, Tish. You've all heard what she had to say. So if anyone wants to get cracking on that, please do. And by the way, just to remind you before I come on to our next speaker that there is the Q&A facility and the chat facility at the bottom of your screen. And I know some people have already taken advantage, but do, as we go along, please do use those facilities, particularly the Q&A facility. Right, now I'm coming to our last speaker from the panel before we open it up. And he is Shayne Halfpenny-Ray, Policy and Public Affairs Advisor at the Chartered Insurance Institute. He leads on the CII's programs of engagement with Whitehall, Westminster and financial services regulators on key consumer interest issues across insurance and financial planning. He is also responsible for engaging with various consultations covering longevity, intergenerational differences and vulnerable consumers. So Shayne, please go for it.
Thanks very much, and obviously thank you ILC for inviting me to speak on this panel. It's always hard to speak at the end of fantastic presentations because a lot of what you've written down previously has already been said, so I'll try not to repeat too much. But just before I start, just a little about the CII in case you're not too sure about us. We're a world-leading professional body for insurance and financial planning. We have over 125,000 members across 150 countries, and our Royal Charter remit is to secure and justify the confidence of the public in the insurance and financial service market. So our kind of focus and our analysis of things, it always comes at the heart being public trust. So today I just wanted to tackle really the kind of current situation that we're in, and maybe some of the factors that have kind of exposed us all really to issues around financial resilience and the kind of the vulnerability question that we were mentioning, and then maybe head on into some of the work that the market is already doing, as well as some of the stuff that CII and its members are doing as well. So kind of to paint a picture really, for over a decade we've seen that the economy is slowly recovering after the last financial crisis in 2008. And this has obviously left us exposed to a lot of things, including job loss at the time, but certainly the growth of household debt and what that's meant for people's kind of upward mobility. And we've also seen stagnant wages, rising living costs, coupled with a changing economy, and in that sense, a change of forms of employment being more temporary, and the gig economy's absolute growth and dominance. And that means that some kind of traditional protections that the people, maybe such as myself, that's a permanent employee, take for granted, such as sick pay and paid leave, aren't always part of those types of contracts. And then amongst those formal, kind of more traditional forms of employment, there's still only a small proportion of people that have kind of individual income protection or even group income protection policies. And that means that if they do take a leave of absence for a set period of time that goes beyond the traditional forms of protection, it means that a lot of the time their income isn't protected. So that's kind of a small idea of those effects. And then, you know, we see the fact that the Money and Pension Service, just before COVID-19 really kind of took hold in the UK, they released their financial wellbeing strategy for 2030. And there was pretty damning kind of statistics in there. One of them, which is that 11.5 million people have less than £100 in savings to fall back on, and that 9 million people often use credit to pay for food and essential bills. So there's some real kind of vulnerability aspects there already in terms of household finances. And then obviously, if that wasn't enough, we're now going through one of the most unprecedented crises as touching society and our economy that we've ever seen in peacetime. And in terms of job statistics, the Resolution Foundation's latest job figures show that since April, there's been a 1.6% fall in employee numbers. That's approximately 450,000 people that have lost their jobs since March. And then there's been an increase of people claiming unemployment figures. So that's now 2.1 million people that are unemployed and claiming for that unemployment, which to paint another picture is a third higher than after the 2008 financial crisis, and that's an extra 850,000 people that are claiming unemployment since March. So to top it off, the Chancellor's come back and he's kind of poo-pooed the concept of a V-shaped recovery. So our economy doesn't look like it's going to bounce back as quickly as we may have hoped in the early days, and has, you know, kind of threatened that there could be a financial crisis on our hands and a recession to top it all off. So to be a bit bleak, that's the situation we're in, and therefore that's why topics like today are so important. And the response to this is to really analyse who is vulnerable amongst this. And I think, as we've already established, as the FCA have said already, that everyone has that capacity, whether it's now, tomorrow, or later in life, to be susceptible to those kind of shocks to your life and to your finances. So it's always good to try and engage if you can. And I think that engagement issue is one that's always been a question, and probably will continue to be a question for some time until we can come up with some adequate solutions to better prepare people. And as it's Mental Health Awareness Week, I also thought I would just raise that point about mental health being another kind of factor of vulnerability that's quite linked to finance. So the Money and Mental Health Institute research showed that over almost half of people with problem debt also have a mental health problem. So it's quite stark when we think about that sometimes we think of them as a separate issue, that mental health is a clinical issue rather than a social issue that kind of pervades our life. And so I think that a real kind of analysis of that as part of that financial picture is really important. And I'm pleased to kind of see that there's more and more awareness of that every year, that how it plays into those factors. And so to kind of talk about the work that's ongoing in the market, some kind of mention that people have already said there's some fantastic areas of training and obviously responses from firms and individuals. I think in the short to medium term, there's been some great steps taken on the insurance side for consumer interests, such as solutions including, but not exclusively, like premium rebates, premium holidays, flexibility in the motor insurance market, particularly around MOTs and date of renewal. And we also support the kind of longer term goal of a kind of pandemic free or some form of a long-term solution to ensure that these shocks don't affect our economy and individuals in the same way again. And the FCA's temporary guidance as well for insurance and firms on how to be a bit more proactive and flexible in their approaches to consumers is particularly kind of good to see, although I would also say that it was heartening to see that some insurers had already kind of been quick off the bat to do those things before that guidance was issued. So in the long term, that issue around engagement, I think is important. And I think at the heart of that someone's already touched on the fact that our products and our services and the way we convey our business needs to be accessible to people. And that goes across all of the characteristics and kind of criteria that we've listed today. So for some areas where people with disabilities can't interact with products and services, or they can't get the cover, or they can't get cover at an affordable rate, these are all issues that affect real people every day, and they're areas that we're looking at anyway. But I think the current crisis really does underline that vulnerability factor, tenfold, and really does kind of impact the people that already experience these fallouts in what we would call kind of more stable and more normal times. They're impacted to a greater degree. So some of that work that I wanted to get onto is part of the Cabinet Office sponsored Access to Insurance Working Group that we chair a work stream of on professionalism. And the goal of that working group is to improve and increase access to protection insurance for people with disabilities and long-term illnesses. So part of those kind of products and those kind of groups and those kind of work activities, some of which you've heard already, those are the ones that are really going to help drive towards those long-term solutions that really do kind of protect people, particularly those more susceptible to those kind of financial shocks, and really try and re-engage people in their finances. And also, not to be too crude, but I think there's a real opportunity coming from this crisis, as bleak as that may seem, that we can really evaluate our response to activity, even in a more stable and more normal time, and how we would better conduct ourselves to really kind of really build that trust and win back some of that trust that we may have lost in this current activity. So I think there's certainly some kind of space for us to have an open conversation about, what the response has been and whether we could have done better, and how we could do better tomorrow. So I think I'll leave it there, and happy to kind of expand on those points in the discussion. Thank you.
Well, thank you, Shayne. And speaking personally, I'd like to know when I'm going to get a rebate on my car insurance. My car hasn't gone anywhere for months.
That was one insurer, I should say. Admiral were offering a small rebate on premiums. So it was just a kind of throwaway example. I apologise. I'm not trying to kind of say that all of them will, but yeah, I thought it was a really good example of that response.
Sadly, I'm not with Admiral, but there we are. So thank you to all our speakers for raising a lot of very thought-provoking points. Again, a reminder, please do use the Q&A facility, putting your questions. And before we turn to questions and answers, we've got another poll for you, just to get your thoughts on what's happening in the current pandemic. Again, 3 choices here. What do you think is the greatest risk for vulnerable consumers during COVID-19? I mean, scams is an obvious one. Cashing in pension pots. There's a real worry, isn't there, that with the pension flexibilities that George Osborne introduced, there'll be a lot of that happening on a panic basis when it might not be at all wise. And finally, chasing the market if you have investments, ISAs, whatever, in equities, whether you're much better holding your nerve, waiting for the markets to improve, and whether people are panicking and bailing out with cementing in huge losses on their investments. So please choose one of those as your greatest risk. Right. Well, scams top of the league, 60%. Cashing in pension pots, interestingly, about 1/3 of people. Selling shares, interestingly, only 8%. Well, I wonder. But anyway, clearly scams are top of the agenda. So let's go and take some questions. There's been quite a rash of questions about the use of the word vulnerable. question here from Violet Rook saying the term vulnerable needs to be changed because of this negative aspect. Are customers told that their conversations and speech are being analysed so closely? And interestingly, there's a question specifically to Grant Hughes from Martin Reed. Do you inform your customers you're marking them as vulnerable on your database? I wonder if, Grant, you just want to deal with that question straight away.
It's something we took advice on, to be fair. So it is something that obviously it depends upon the nature of the vulnerability that they're talking about. Obviously, sometimes like mental health and well-being is quite a sensitive subject. But if a customer openly volunteers that information, then we will obviously flag it, and we get their permission to mark it on the system, and it's in our terms of business and other documentation that where we will share it with certain product partners. So, for example, if we're working with our colleagues in home finance on a lifetime mortgage, for example, which is another part of the Legal and General group, then when it's in our customers' best interests, obviously it makes sense to work with other partners within the group to make sure they get the right customer experience. But in the event of mental health and so on, it's something a bit more sensitive. So generally we don't mark that for a customer. So we don't get their permission on that particular aspect, but we have had guidance around that, and we're quite comfortable with that stance. But I think the main thing is to be talking with your customers, and quite a lot of our customers are quite open about some issues. It's just about listening to customers, and they'll quite often volunteer some of their information through. And those ones that don't volunteer it, then it's just gives us an opportunity maybe to probe and follow up with some additional questions. So if it's something that we have a suspicion on, then obviously you can probe that bit further, and often customers will talk about it more openly. They want to speak about some of their issues often as well. So hopefully that answers the question. I'm not getting visibility of the questions on my screen, I'm afraid. So you'll have to shout out if you see any come through to me.
I will. Well, you've dealt with that one, which was specific to you. And then just before I move on to the rest of the panel, this definition of vulnerable, as I said, Violet Rook has raised whether it should be changed because of this negative aspect. I think that's something Karen touched on. Bridget Penhale in response has said, would the use of at risk of harm from XYZ be better? Could be vulnerable due to circumstance or situation, but that's a bit of a mouthful. And again, Brian Beach, our own Brian Beach from ILC, saying, I wonder if part of the challenge with the terminology is that it's unclear what vulnerability means here. Vulnerable to exploitation, FCA definition, or vulnerable to lack of adequate finances. Possible solutions would be different in these two examples, and a better focus differentiation might incorporate the class dynamics that underlie this discussion. Well, let's just pause there. I mean, that's a number of people coming at the whole definition of vulnerability from different directions. We may well have a definition from the FCA, for example, but that's not the be-all and end-all, particularly as colleagues have said rightly that new groups of vulnerable people have suddenly popped up in the last 2 or 3 months. So who'd like to kick off on that particular question?
Yeah,
Karen.
I can jump in. If you like.
Shayne, yes, Shayne, there you go.
I was just going to say, from my kind of own experience, and a lot of the work that I've been doing, the Access to Insurance Working Group is working with charities around disability and long-term illness. And so one of the kind of key things that they say to us that when they don't like the use of vulnerable is the use of lived experience. That's quite a popular one for people because there's no kind of connotation to that, and it is talking about their personal experience or experience of living with other people with disabilities. I'm not saying it could be used for every scenario, but then maybe it is a case of trying to differentiate those different forms of what we're calling vulnerability and maybe having terminology to fit those different areas. And so it might not be all kind of tied up in the same bow, but it then is a bit more acceptable.
Okay, who else would like to comment on the definition? Tish, what about you? Tish, you're muted.
I'm unmuted. Well, I was listening to that, and I think it's a really good question that's been asked there, and I think it was really well raised by Karen. It seems to me there's two different things to it. There's the issue about identifying vulnerability, and the issue which is objective, where you look at and try and define what's vulnerability for the positive reason for helping. But there's the subjective part, which Karen mentioned, which is about, does a person want to feel that they are vulnerable? And so we're using vulnerability to cover two different situations. And I would just say, I think maybe the word perhaps therefore needs to be changed. I agree that there's some quite complex ways, suggestions what it could be, but raising the issue that should it be raised, I think is the most important beginning question. And I was thinking about how you see things differently if you just change things a bit. And the example I was thinking of was that the organised charities such as, Alzheimer's Society, Dementia, UK have always moved to say, stop saying people, suffer with dementia or suffer with Alzheimer's, move to say they live with it. And that subtle change of emphasis has made a big difference, both to how we approach it and to those that work with people that do live with dementia. So I think there's a lot to be said for looking at how we, if we could change this in some way, particularly because one of the things about vulnerability that's always the case is that it may be because of circumstances and therefore subject to change. And no one wants to have been identified somewhere as vulnerable and forever kept as vulnerable.
Yes, thank you, Tish. I think Martin had his hand up.
Yeah, I mean, I was just thinking about, we did some work with the FCA last year around, their guidance consultation, and they were quite minded to point out that, whilst it may be called a vulnerability policy, that's what they're expecting firms to have. It doesn't necessarily mean that the client has to be named as vulnerable, in a sense that the emphasis should perhaps be clients or consumers who are in vulnerable circumstances. And again, I think it's like Tish said, it's just changing that nuance to, rather than labeling the individual as vulnerable necessarily, it is remembering the phrase, is somebody especially susceptible to detriment due to their circumstances. And I think that's important. So nobody likes a label. I know I was speaking to my colleague recently, and he said, if you told my mother she was vulnerable, she could clip me around the ear, sort of thing. People don't like to be called vulnerable, but I think there are different ways of doing it. I've heard people who may need extra care or going through some of the phraseology that's used around life events. I do wonder though, in the current situation, whether we might see a bit more openness about that. I don't know. We'll have to wait and see. I think people are perhaps being a little bit more open about, particularly I think a mental health issue was mentioned as well. And again, Mental Health Week, I think that has become a little bit more of an open conversation. But we still have this British stiff upper lip, don't we? Don't want to admit that we're vulnerable, but yeah, maybe changing the phraseology might be a sensible idea.
Okay, Karen, you kind of raised some of this in your comments. Did you want to add anything at this stage?
No, I guess one of the things I'd been thinking about in terms of the scam side of things was that basically at the moment anyone could be especially vulnerable just because of the sort of extra work everyone has on their hands at the moment. I'm thinking of parents who are hassled at home, that sort of message that pops up on your phone, you would maybe not give it the same attention that you would normally, so you click on the link without realizing. So it was that sort of thing that I think particularly brings it to mind at the moment. I do have a lot of certainly agree with what Martin was saying there about the fact that mental health was kind of something people shied away from, but thankfully that's more out in the open and people are more willing and able to say nowadays that that's something they're suffering with, and it's impacting their lives. So to be able to move to that environment where people are more willing to put their hands up and say, yes, I'm needing some extra help is absolutely where we want to get to.
Yeah, I'll just ask a question for anyone in the panel who's interested in answering it. I mean, it just arises out of something Tish said, and others have said. We have a whole, if we'd been having this conversation 2 or 3 months ago, it would have been very well defined. We'd be talking about people with mental health issues, older people, people with dementia, so on and so on. But there's this whole new group, out there who are A, isolated, many of them socially at the moment through no choice of their own, and secondly, as I think Tish put it well by saying, there's a danger of people making short-term decisions about long-term goals. That's people who may well have significant pension savings, may have been far from being vulnerable until very recently, and are now being pressed by circumstances, by panic, human reactions to doing silly things now, which they wouldn't have dreamt of doing before the pandemic. Are we doing enough for this new group? I mean, many seminars, conferences, etc., have been spent over many years on dealing with the existing vulnerable groups, but this whole new group, are we really engaging with them in the way we should? Not least because we're all isolated at home mostly as well. Who wants to have a go at that?
Well, I mean, the FCA published a paper. If you look at their paper, which is based on, they call it Our Future Approach. There's a forerunner to that, but they really bring together consumer vulnerability and behavioural bias and put it into one document and say, actually, these things are really closely related. And I think, you know, if you look at, you know, the behavioural insights team was set up years ago. And there's insight there in terms of what people will do in given particular circumstances. So we might see herding bias and things like that, recency bias, people acting with this short-termism could be a real risk. And I think that's where, you know, keeping in touch with clients and understanding what their circumstances are, how they're feeling about coronavirus, and as has been mentioned a few times now, making sure they're aware of the dangers of, you know, just following the herd, or even scams, unsolicited emails, telephone calls, and these things that might now appear to be these offers that people might be getting to get themselves out of a situation which probably appear to be too good to be true, probably are. But yes, there are firms that have done quite a lot of work on behavioural bias, and I think that is a really important factor, because you could get to the situation where, you know, behavioural and biases now could lead to vulnerability, you know, in the future as well. So I think having a good financial advisor, financial planner who can look at things objectively is going to be a key measure of good outcomes.
Can I just say, I absolutely agree with what Martin says there, and just to go back to what I said in my introduction, that's, I think, one of the things advisors can do is to be proactive. In other words, you know, you're right, Nigel, to say this is a potentially new vulnerable group because of this change in circumstances. And the feedback from our solar members is that at first, as I say, they just were trying to adapt. But now they're looking and saying, well, this could be long term. What do I do? And without someone that they can rely on, they may well make the wrong choices. And so financial advisors' obligation is, I think, to be the one that goes, that contacts them proactively and says, look, we can have this conversation. You need to think long term, because left by themselves, you know, people do make poor choices because there are so many other influences upon them. So I think that's where advisors have a very big role to play in letting it be known that they can help and that they want to help.
Yes, and indeed the best advice at the moment in various circumstances might be to do nothing.
Absolutely, absolutely, to do nothing, but to have someone they trust tell them it's okay to pause. It's okay for a moment just to stop. Because otherwise, you know, people are saying, well, what do I do now? This is a changed life, I've got to change it. Not necessarily.
Yeah, okay. Anybody else want to talk about that issue? Okay, well, I've had a question from Jane Vass of Age UK, which I think is interesting. For all speakers, interested to see the drivers of vulnerability. All seem to be focused on the consumer, but vulnerability can be increased or reduced by the financial transaction underway or the behaviours of the firm. How do you take this into account? And then there's somebody else, Deborah Price, has added to that, following Jane's question, what changes in the underlying system design of saving for later life would reduce financial risk for everyone? A very big question there. Who'd like to plunge into that?
Yeah, I can start, and then obviously more expert people can pitch in. But I think one of the key parts of a lot of these issues actually is about engaging people with their finances throughout their life. And so traditionally speaking, a lot of the time when you buy a particular product or when you save some money, it's usually to do with a certain action. So you know, in more stable times, it's about saving money for a house or something like that, or a holiday or something, or buying protection products if you're later in life or if you've had children. And I'm not obviously saying that, you know, everyone should get every kind of product under the sun, but I think it is about trying to engage people with their finances at different stages in their life. And I saw one of the questions was about is the kind of financial services sector looking at different kind of pinch points in people's lives? And I think to a degree, sometimes we have in different themes. I know for a fact that the Ensuring Women's Futures program that was launched by the CII was looking at the pinch points in a woman's life that she's specifically susceptible to compared to men. And so there is research in that kind of notion, as well as in wider kind of areas of where people can be quite vulnerable to these financial shocks. So I think it is about trying to keep people up to that and that long-term engagement question that I mentioned in my presentation. And I also think it's about behove on the kind of the industry and the profession to try and uprate the value of advice and not always just talk about, when a lot of the conversation is sometimes talking about price and cost of things and services. I think it's the value of things, so the value of a service, the value of that advice, and really trying to kind of connect those dots and get people to seek good advice. I think that's a really important part of it all.
Okay, anybody else want to plunge into this very big question?
Yeah, I'll take one aspect of it, which is probably more to the question about what changes in the underlying system of savings. So I think we have seen a fantastic response to auto enrolment, which must surely have a huge impact on probably the area of the population that was most needed to actually think about their savings for retirement. My biggest, or one of my concerns, is that through we've mentioned people going on to furlough and things like that, through that whole process, completely expect that some people will have to drop their pension savings for the next maybe 6 months, but making sure we get back to where we were with auto enrolment and making sure people get back on track with their retirement savings, and that the engagement that people had started to build with that pension pot isn't lost because of this dip in sort of salary levels and financial issues that we've got. So for me, that's a big one. And it also is, we've talked quite a lot about advisors, which, you know, that's a huge thing for people to be able to go and have that trusted voice to go and speak to. I don't think we should forget that there's a large part of the population who can't afford or don't prioritise paying for financial advice. So something like auto enrolment, which was done in a way that you know, the employer and the trustees looking after those schemes are kind of doing the thinking for them en masse, which has been a big positive towards getting people to save for later life.
Yes. Anybody else on this question? Okay, right. I've got a couple of comments here. Nicholas Richards, as a practicing solar accredited financial advisor, I agree with Tish that it is our role to identify any client vulnerabilities, whatever they are, and then address the issues without telling the client they're vulnerable. Fair enough. Also, my apologies to Jane Vass, who has reminded me that after 13 happy years, she's no longer with Age UK and is working independently, but obviously still taking a close interest in these issues. Now, here's an interesting one. Jenny Stott. The government recently used health data to write to over 1 million citizens to advise them they are at higher risk due to COVID and to stay in their homes. What can the financial services industry take from this nationwide effort, positive or negative? Given the fact, I mean, I believe there have been a few glitches along the way in identifying these, I think it's 1.3 million people. Certainly chatting to people around where I live who either were on the list and didn't know why, or should have been on the list and weren't. But is that sort of initiative possible with the financial services industry?
I was going to say that I suppose it speaks to what some of the speakers have already said about the importance of collecting that data, and the, you know, despite whether or not there are connotations about the label of vulnerability, but understanding your clients and their needs, and whether they do need, you know, proactive engagement, particularly in times such as this. I think that's a lesson that we could learn. And the only way the government was able to do that is using, you know, live data that they've been able to access through the NHS, and the NHS opened that up to them. So perhaps it is just a case of, you know, for a firm, it's making sure that they have accurate data and that they can then kind of respond to crises as it happens. I don't know about a kind of a pool of data for other people. There's certainly in the works, the FCA is looking at open finance, but I think that's from a different angle. So I think that's all I'd say on that.
I think one thing I might say is that it's an interesting example that I think a lot of us could learn from, about the government actually doing what they've said in the past and very often haven't, which is to give, you know, public information messages, because it's a good example of the fact that when people understand why they're being asked to do something, they will do it, because pretty well we've seen that people who have been identified as vulnerable, you know, have stuck to that. So there's been lots of things I can think of where the government have said they will do a public information. I would look at, for example, care funding. I obviously would, but and then that didn't happen. And changing people's behaviours, you know, by public information. This is a good example of how it can work.
Yeah, absolutely. Anybody else on that point? Now, here's a question. Sorry, yes.
I think it does show the importance, as Shayne's alluded to, really, of keeping that information up to date, because obviously if you've got good quality information, then you can have great quality outcomes. But again, it just really gives people an opportunity to engage with their customers and clients, whether it's through writing out to them, which can be a great way of communicating with your customers, but equally it can be a bit impersonal. But certainly when we've been speaking to customers who we've maybe identified as going through a position of temporary vulnerability, which I think often gets ignored. I think some people tend to think people are either vulnerable or they're not, when I think Martin alluded to it may just be a period of their lifestyle that they're going through that's put them in a difficult situation. But people will come out the other side, and it's important to make sure that information is kept up to date by going back to your customers and speaking to your clients and so on, and doing that. But from our own experiences, I think if you do it in the right way, and if you're showing empathy and that you've identified that actually somebody may be going through a difficult period of time, and you're checking in on them to make sure that the circumstances may have changed, but how's that impacted them, they do really appreciate it. They appreciate the fact that you're taking a genuine interest in them as well. But obviously you've got to have that information, and you need to keep it up to date. And we were fortunate that we were building a new system as a new business. It's a lot easier to do that than when you've got an existing organisation or a large business and trying to create a new up-to-date system to be able to provide that information. It's a lot more challenging.
Yes, quite. Now, here's an interesting one from Martin Reed. He says, as financial providers have offered more flexibility on products, like payment holidays, interest freezes, and so on. We heard something from Shayne about this, so I'll go to him first. Do you think more consumers will realise that revealing their vulnerability may benefit them, both now, during COVID-19 and beyond? That is interesting. Actually, there's a financial benefit in agreeing you're in some way vulnerable. Shayne, let me start with you, because you touched on these various easements that the insurers and others have been coming out with.
Yeah, I think it depends on your relationship with your customer. I always find that when it comes to a lot of issues, it depends on how comfortable you are sharing information. So even if it seems that there might be an upside or, you know, a potential kind of easement on the strain, I think even if that's an incentive, I think if you don't have a good relationship with your advisor or whatever firm is providing that service for you, then you wouldn't necessarily come forward. But on the other hand, you know, I think that, you know, it is a good sign that there are actions being taken by firms and by advisors to respond to the current crisis anyway, so that, you know, they don't necessarily need someone to come to them to ask for that help. They're already thinking about, well, actually, this could help our customer base, and do that as a blanket action. And then obviously, if they are, you know, proactively engaging with their client, and that they know they may need extra support or being more flexible than perhaps they have been in the past, then they can take that on board, I think, if that makes sense.
Yeah. Anybody else on that specific point?
Yeah, I can't let this go without answering it, really, bearing in mind the marketplace that our business works in. And that is, you know, I think people have been reticent before to share, you know, medical details and things like that, on the basis that if you disclose some of these things to an insurance company, normally that means bad news in terms of premiums and things like that. But I can't let this one go by without talking about the decumulation journey, where in fact, if you share that information, you can be significantly better off from the point of view of how much guaranteed income you can get. But I would say that, obviously, but it's true. We did a session with Rory Percival just a week or two ago. It's on our website if you'd like to see it, where we talked about the whole retirement income review that's being launched. And we know there's been some deferral in that, but nevertheless, you know, putting together a strategy whereby actually it makes sense to disclose more information, get more sort of higher levels of income, whether that be for you know, long-term care or pension income. I think, you know, changing that mindset that says actually you will benefit from disclosing this information. And you know, I think that's important. And an advisor, I think, have the ability to elicit that information through the know your customer processes and the skill set that they've got. And I think that's more important now than ever it was.
Yes, I remember someone once saying, an insurance specialist, that the only time people tell the truth was when they filled out about their smoking and drinking, was when they filled out forms for an annuity. Here's an interesting, a very specific question from Sashi Nair. Does the panel have any advice on dealing with vulnerability due to poor communication skills, e.g. non-English speakers? I imagine most, if not all, financial services organisations have a facility of offering different forms and booklets in different languages, but is that enough? Is there a further extra mile people are going or should go to try and reach these particular people?
So, Nigel, that's very interesting, because the very last meeting in London, which seems forever now, in Westminster, was 2 days before lockdown. One of the meetings I had was to look at, for solar members, some training specifically on this. And the person that I was speaking to, who is going to do some work with us, was making a point which I will just throw in here, which is the poor communication aspect of people that don't speak English is always very often juxtapositioned with some cultural differences that really do need to be taken into account. In other words, it isn't just enough that you could translate something from one language to another. There is the obvious barrier that if you are reduced to only doing it in writing, that is problematic. Yes, you can have translations, but you've got to have the right person doing it. But even if you did overcome those barriers, you do need to also be conscious that for some people, the language barrier is also, if you like, the obvious thing you see, but there is also a cultural barrier too. And understanding that is actually key to getting the right kind of communication. And if you don't, then those people are vulnerable. Because if you don't get the cultural part right, they may not feel that they can work with you.
Yeah, that's an interesting way of looking at it. Anybody want to add anything about what their own organisation is doing, or think should be doing, could be doing more?
I don't have anywhere near the first-hand experience that Tish has on that, but I would have imagined, and I'm glad you raised that point, Tish, because that feels like a really important one. I think for me, with so many aspects of dealing with vulnerable customers, the people who are on that sort of front line, the call handlers, for them to have just these tips and sort of knowledge of how to hand off a conversation that they can see, you know, that they're maybe struggling, you know, at the insurance company, they're struggling to know how to deal with that situation. I think it's about having the right process within each insurer to be able to deal with those and give the frontline call handler that kind of tools to work out the best way of dealing with things, you know, not assuming that everybody who phones up is going to be using English as a first language or whatever it is. I think just not making assumptions about your customers is so important, and also making sure, as I say, that the people taking those calls have got a plan, a route to help each of those different types of people.
Yes, okay. Now here's a couple of related questions. One from John Hutton Attenborough, who says, is it not the time to widen this topic to justify why somebody may not be considered vulnerable as much as being so? Looking forward, could a client potentially claim they were misadvised for whatever reason because they were vulnerable at the time of the lockdown, COVID? And there's another question here from Colin Jessett, which is related. On the subject of product changes, do you think we will start to see actual COVID-19 clauses, for example, on annuities? I mean, Colin raises an interesting issue. I mean, I'm sure the lawyers are already beavering away, but we've already seen this with travel insurance, trying to get travel insurance. If you're an older person wanting to book a cruise at the moment, it seems to be quite challenging. And with all sorts of exemptions for problems relating to the pandemic, if say it spiked again and wherever you happen to be visiting or proposing to visit. Maybe getting ahead of ourselves, but the colleagues in the business of insurance and related financial services see this as something that's going to come back to bite us even once the pandemic hopefully has been put to rest.
I think it's an area to be very careful on, certainly. I mean, in our own experiences in terms of dealing with customers in the current situation, one of the ways that we certainly got greater engagement with our own people internally was to try and flip the question around in terms of why is this person vulnerable to why isn't this person deemed to be vulnerable in the current circumstances. And it certainly saw a real uptick in terms of the first of all the conversations that took place internally around the types of vulnerability that people are going through, but also the fact that, you know, it is such an unusual situation that I do think genuinely, yes, there is a large case for saying that far more people at the moment are deemed to be vulnerable. So just changing the way that question is asked and making you think through the challenges that person may be going through will help you put in place the right measures to be able to support those customers and to get the right customer outcome. Not everybody is going to be vulnerable in these circumstances, and where one person may be struggling, another person may be thriving, but it does really just help you think through those different scenarios, what the potential impact on a customer may be, and how you're going to adapt your process to support your customer. And I think if you're thinking those things through and documenting those things through, then first of all, you'll get a better customer outcome, but secondly, also from a protection and making sure your own files are robust and reflective of the right situation, then it'll improve that file quality as well.
And on the subject of the legal stuff and exemption clauses, all that kind of stuff, looking ahead, is that something that concerns you?
Not so much. I wouldn't say it concerns us because of the current situation. I think you have to look at all of your customers and make sure you're doing the right thing, and how can you improve the quality of your files, and how can you improve the right customer outcomes. And as long as the conversation that's taking place is reflected in the file, then I don't particularly worry about a change in circumstances moving forward. It's just making sure that the quality of advice is right at that moment in time. And if you're having those conversations, then that can only improve things. As a business, we record all of our conversations on all of our interactions conversations, whether they're face-to-face conversations outside in the normal environment, obviously they're not taking place at the moment, or whether they're over the phone. Every single interaction is recorded. So we've got that information for training and monitoring purposes. And that really does help us improve the way we do things, but also as a business, it does help protect us, but also protect the customers who may sometimes forget what was said and how it was said as well. So it's a really useful tool to be able to have.
Yes.
I think
Is this something you want
agree there with Grant and what it is.
Karen? Yeah. Was that Karen? Hold on. Whoops.
I think it was Tish.
Tish,
It wasn't me, Nigel.
It was me.
Tish, go ahead.
It was. Yeah, I was just saying I completely agree with what it's an interesting question raised by John, which is really the whole aspect of best practice and recording it. So I think vulnerability to me is a bit like capacity, in that when you look to assess it, you should start from a neutral position. So you shouldn't start from trying to find that someone is vulnerable, just as you shouldn't try and find with capacity, trying to find whether they have capacity or not. You start from a neutral position. And then you should, in terms of best practice, identify the things that made that person move one way or the other. And in terms of an ongoing legal claim, if that would happen, it would be where they'd identified that the right kind of processes had not taken place, and it would have to be as a result of that, person suffered some detriment. So I completely agree with Grant. A lot of that is about putting the right practices in place and really importantly documenting it.
Right, okay. Then I think we're going to have one last question, but it's quite a good question. If I can just remember where it is. Yes, it's from Catherine Birtle. She says, consumers are being forced to take on a range of new risks they did not have to worry about previously, e.g. saving for retirement, in DC pensions, investment risk, insecure work, problems with insurance, etc. Would you agree this is expanding the pool of customers who are vulnerable to bad financial outcomes where they are not well equipped to manage risk? And I guess the two very specific examples Catherine has in mind are the pension freedoms and also the demise of DB and the growth of DC pensions, where just about all the risks fall on the individual, not the company. Who'd like to kick off on that? Martin.
I can't help myself again. You know, when vulnerability was first sort of conceived as a concept, a theme for the FCA, it was in 2015, which, if you remember, was a year that was relevant for one other very specific reason, and that was exactly what you've just described. That consumers were taking on far more complex decisions than they had done before, and something that looks on the face of it is fairly simple, as we know, fairly complicated. And we've already said that behavioural bias has a massive impact on consumer vulnerability. And what we're starting to see now is more and more work being done on things like the potential for retirement income review. That is, as I say, we did a webinar on a couple of weeks ago, looking at, you know, what are the risks to outcomes given the more complex environment that people are in now, and some of the things, you know, some of the actions that people have taken over the years. So I don't think it's any coincidence at all that the consumer vulnerability agenda happened around the same time. And so I think absolutely right. If you look at, you know, the need to put in a retirement proposition which covers those new risks. Somebody mentioned the absence of DB. We have no minimum income requirement, although we've got changes to the state pension. That investment risk and longevity risk is now being borne by the individual in many cases. In fact, somebody said that, you know, in April 2015, everybody became an amateur actuary. So, you know, lots of questions around, you know, are there new risks? And I think you're absolutely spot on. So I think, you know, the emergence of this, of a need for centralised retirement propositions to mitigate some of those is going to be key, and it's no wonder that's a key theme at the moment as well.
Grant, did you have anything you wanted to add on that?
I'd agree with Martin. To be fair, I think he summarised it very well. But I do think education and guidance as well as advice is really key for these types of customers. And arguably, whilst some of the products that are available now don't have some of the same guarantees that used to be available in terms of the DB, you could, I guess you could potentially flip it in the fact that some of our customers are maybe more informed than they were previously as well, with the wealth of information that is available as well. So I totally agree in terms of there's always a need to innovate more and to see whether we can come up with new products and services that are right for today's climate and right for today's customers and the challenges they face. But we're also in a very fortunate situation where information is so readily available, and it's how can we tailor that to customers to help them make the right decisions and the right choices using tools, using really good quality advice and making it more affordable for customers. I think is one of the biggest challenges that we have as an industry. Looking at vulnerable customers and some of the particular challenges we may have is where people have got smaller pots and maybe less complex circumstances. They often get positioned more into the telephone advice services or digital services. They can be fantastic solutions, but where you've got a vulnerable customer, it may not be right for those, particularly if they can't access, online services, or their financial literacy is maybe not to the level that they would want it to be. So there's a number of challenges there, but I think it is a real risk. Yeah, I'd agree.
Well, thank goodness people are not faced at the moment with having to buy an annuity in the way they used to be. Anyway, I'm going to draw to a close there. I'm sure the rest of the panel. Martin has one last.
It just ties in the comment there, and also an earlier comment around COVID clauses that somebody mentioned. I just wanted to, as we're on that subject matter, that you will see announced in the coming weeks that we are putting in place a COVID clause on our care contracts, so that if people are concerned about that, there is going to be a 1 year money back situation if the client passes away due to that. So just another innovation, as I forgot to mention that a bit earlier on, but it might be quite important for people on that one.
Well, that's very interesting. Yes. Well, I think let's draw things to a close, because we said we'd finish by 4. I'd first of all like to thank all our panelists who've been very, very good coming up with some novel ideas and dealing with the questions. I'd like to thank all our questioners for their questions and comments. I apologise to anyone whose questions we didn't get to, but that shows how much interest there was. I think, without wishing to go back over everything that was said, I think it's 2 or 3 specific points I think have really come out of this webinar. One is that the whole definition of vulnerable is very complex. It's complex because it isn't just about older people or people with dementia or whatever, as some people might have thought. It involves young people as well who can be vulnerable. Somebody made that point, which is a useful moment to remind everyone that the ILC is about the entire life course. We're not just doing work research and work on older people. We're looking at the entire life people spend, and that includes obviously younger people. So we have issues about the use of the word vulnerable, whether we should actually tell anyone we think they're vulnerable. I'm sure there's more diplomatic ways of approaching it. There's the issue, which I think came up very loud and clear, that there's a whole bunch of people who would never have been considered by any of us vulnerable, and didn't even consider for a moment they themselves were vulnerable until the events of the last few weeks. And whether that entire problem is exacerbated because they're unable, for obvious reasons, to have face-to-face interactions with IFAs and other people to talk through the issues and give those kind of little clues, these tells that I think Tish talked about, where you're picking up in a conversation whether there's undue influence, whether there's something more sinister going on. So there's all that, I think. And the very fundamental issues of people perhaps who aren't subject to scams, although the scams seem to have multiplied dramatically if you read all the relevant coverage. But simply the fact that people may be panicked into making short-term decisions which will have a long-term impact on their futures, and in particular their retirement. So there's all that to consider. I'd like to again thank Hymans, Robertson and Legal and General and all the members of our ILC Partners Programme for their support. It's worth having a look if you haven't already at our partners program, which gives a lot of opportunities for businesses who want to get involved in supporting our work. You can contact our head of partnerships development, Redvers Lee, who's on our who's Redvers Lee at ilcuk.org.uk. Do visit our website, as I say, to see what we're up to. We have a whole series of webinars. This is the 5th in a series on COVID and the aging population. You may be interested in sponsoring a similar webinar, in which case please contact us. Again, a mention of our Future of Aging conference, which is a major event once a year. Events are on, it's the details on the screen, 3rd of December. Hopefully by then it will not be done on Zoom or any of its competitors, but will actually involve real people meeting face to face. Let us hope so. Confirmed speakers include Jonathan Porritt, Fibar, Krieg and Reed, and there'll be lots of other interesting people to listen to. So do look at our website, do keep up to date with our news, and we hope we will welcome you either as an attendee or a sponsor of a future ILC event such as this. Thank you very much indeed, and goodbye.
Thank you, Nigel.
Thanks a lot.
Thanks very much.